Good morning, retail traders. This is the Sneaky Snake trading strategy where we talk about chart patterns, moving averages, and being in the now. Right now, I want to talk about the trade we made on Friday on the SPX. It was very lucrative, and we're going to pull up that chart right now. They got this on the 1 minute time frame for right now. I just wanted to show you when I'm day trading and scalping what time frame I do use, and that is the 1 minute. I like to look for the chart patterns, and there's a couple reasons why I like this trade on Friday. And the first thing I want to show you is the support level. So we're going to pull up the 5-day, 5 minute. And we pulled right back to that 5-day support that we've been pulling back to all week. Pulled back here, pulled back here, pulled back here again, and then pulled back again. So that's 4 days in a row that we hit that solid support. So that really got me excited about the trade itself. That's what got me say, okay, we might be bullish on this trade, so we need to look for the pattern. So I'll go back to the 1 minute, and I'm going to change this up here just a little bit. Add that to 2-day. And I magnify this up. And we've got a little descending triangle right out of the gate with a triple bottom. This is descending, which means it's bearish. But right out of the gate, they can also turn around real fast. So we had a descending flag, which I'm going to go ahead and draw this in here. It's telling me that this stock was bearish right at open. And I always count to 3. 1, 2, 3, and then we had the dip, which created the head. And we keep an eye on the trade, and I'm not over with it yet. And it broke out of that and created what I would call a breakout from a descending pattern off of a J hook. And then she came back and retested and created a neckline. There's your shoulder line. You got your left shoulder, you got the left shoulder, head, and then the right shoulder. And that's when I called the entry on this trade, on this inverse. I said, let's go for it. We're at a 5-day low bottom. We have an inverse head and shoulders with a J-hook pattern. If it pulls back, let's go ahead and take this trade and scalp it up to the 200. And I did. I sold some of my contracts at the 200, and it pulled back. Landed on the 50, so I called it out again. I said, we just hit the 51 right now, and you know that's one of my strong supports, the 51 EMA. And running right off of that, she went ahead and started running on up. Man, this trade started going up 10, 20, 30, 40, 100, 200, 300, 400, 500. And I'm going, man, this is a great trade. So I played a put on it and got out of it real fast, and then got back in it again, and we ran it on all the way back up to the little bit to the double top right here, and then she just kept going. But this was one excellent trade on the SPX. Again, that was called out on an inverse head and shoulders. I looked for a chart pattern. The being in the now was the news of the unemployment, which was better than expected, which is always going to be good this time of the year because of Christmas season. People are going to be hiring staff. You got to dig in and see what kind of jobs are being filled. So that was Friday's trade. Remember, always look for a pattern. Take your time. Let a pattern show up. Once a pattern shows up, then you can take advantage of it. This case, it was an inverse head and shoulders. Key takeaways of an inverse head and shoulders is similar to a standard head and shoulders, but it's inverted, which means it's just the opposite. Instead of on the top, it's just flipped over on the bottom. It may be used to predict reversals in a downtrend. Say you're in a downtrend and you could be calling a bullish reversal. The inverse head and shoulders upon completion signals a bullish market. Investors typically enter the long position when the price rises above the resistance of the neckline, which in my case, I like to buy it at the shoulder. If it retests and comes back and tests that shoulder, I'll go ahead and run it up to the neckline and if it doesn't break, I'll go ahead and scalp it. If it does break, I'll hold on to the next resistance level that I find, which could be a double top, triple top. It could be a trend line of some kind of a bull flag or a bear flag. It could be anything. It could be a candlestick as far as I care. So that's the inverse head and shoulders, and I'll set this link on the bottom of the video, and you can go through this. And I love this pattern. This has been one of my best patterns. First of the year was triple bottoms. We ran, almost every trade pulled back, hit a triple bottom, would bounce all year long for like 6-7 months. Now I'm catching pullbacks off these inverse head and shoulders, and I'm seeing a lot of them triple bottoms. And if they fail, they'll create a head, and then it could pop back up and create an inverse head and shoulder. So keep that in mind when you're trading these patterns. This is a sneaky snake trading strategy. I wanted to bring you by the SPX and show you how we traded it. And have a great weekend. By the way, my forecast, Israel's being attacked right now. So I'm not sure how the market's going to take that news. So I'd be a little extra cautious. We had a good Friday, and I was kind of starting to feel like maybe we're starting to have a little bit of big volatility. So we could see some good trends in the downside or the upside, and I'd follow them all the way through. But I'd be careful, see how the market reacts to this news in Israel come Monday. Y'all have a great day, retail traders. Sneaky snake trading strategy.